I expect to see a lot of positioning towards the end of the year before next year because you would expect a lot of companies to do well by the end of the year, despite how difficult the economy is. I think some companies are likely going to do pretty well. Yay! Good morning, Lagos. Good morning, everyone. Great to be back. When I left, exchange rate was 1.6. I'm back now and it's 1.740.
Welcome back.
Good morning, Lagos. Good morning, wherever it is you're listening, to the show from. This is Follow the Money, brought to you by Nairametrics in partnership with United Bank for Africa. Yeah, my name is Ugodre. We do this every Monday, 8 to 8:30 a.m. And I am here with Joanna. Hello,
Joanna. So I'm here as a supporter, as a fan.
You did a good job while I was away, by the way.
Yes, but you were missed.
Yeah.
You were missed. But it's great to have you back. And of course, get your expert opinion and insight on what's happening on the markets.
Yes, of course. A lot of things have happened, since I've been away. We're at the IMF just to see what's happening, listen to foreign investors and see what sort of feedback they have for Nigeria and, their outlook for, the global economy. And it was pretty interesting hobnobbing with a lot of people and trying to find out whether, our central bank and government officials were making headway with foreign investors. And there's a lot of positives from that trip, and looks like, we're hitting the right notes. Interestingly, as bad as things are here for a lot of people, foreign investors seem to like what they're seeing in terms of some of the policies, which is really strange.
And it's election week, right, in the U.S. So I'm sure that will also, do you see it also influencing, how do you see that influencing the investment space here?
Well, election week just means people are more focused on, a little bit hesitant to, invest at the moment, trying to figure out what it means if either Biden or Harris wins. Interestingly, it kind of looks like people are resigned to a Trump. I said Biden or Harris, Trump or Harris, a Trump victory. But at the same time, doesn't look like they see any difference between a Trump and a Harris in terms of economic policy. In terms of the politics of things, of course, there's always going to be a huge difference. In terms of immigration, that's where they really differ. In terms of judiciary and women rights and things like that, that's really where you see the divide. But from an economic standpoint, I don't think there's going to be that much radical change if it's a Trump victory. But bottom line is, foreign investors like what's going on in terms of some of the policies we're seeing, as harsh and as difficult as they all seem. They think that they're in step in the right direction. But whether that's going to translate to FX inflow that we're all waiting for is a different thing. And I'm going to talk about that on a different show, not this one. So if you're not following Money Brief on YouTube, another Nairametrics program that I also anchor, and you're probably missing out. So you probably want to check my Money Brief later tomorrow. I'm going to be breaking down some of these things and explaining what this means for the exchange rate as we approach the end of the year. Joanna, over to you.
All right, let's come to the market, specifically the local bourse, the NGX. The Nigerian Stock Exchange closed the week of November, that ended November 1st, but also ended the month of October somewhat, with a decline. The all-share index is down over 2,000 points, and it settled at 97,432.02 points, and that marked a 2.03 decline when it comes to the all-share index. We lost over $1 trillion on the local bourse in 1 week. Quite a number of decliners and also a fair number of gainers. It's black and white from what happened the previous week, right? The previous week it was all green. This last week, all in the red. And I'm going to come to you before we come to the top gainers and top losers. There were a lot of bets that earning results, the festival would perhaps buoy the markets and push it into the green, but we did not see that happen.
Yeah, because traditionally the Nigerian exchange it's not, of the stocks on the Nigerian exchange is not really driven
by fundamentals.
Yes, mostly, yeah. So it does happen occasionally, but not all the time. And so you won't really see earnings sort of drive, capital appreciation or market appreciation as much as if it was something else like news that foreign investors are probably coming in, or maybe you see that capital imposition has gone up, there's dollars in, or there's some kind of activity. You're not going to see.
There's more perception.
Yeah. It's more perception than fundamentals. Then I think another issue is that a lot of the investors sort of have priced in some of those fundamentals in the share prices. So nothing really
in the build-up.
Then remember, I thought Q3 as well is not often associated with dividend payments. So dividend payments tend to happen in the half year, during half year results. And so when it's Q3, you're not going to see a lot of market activity because, there's no dividend expectation. So you won't see people move into shares. But all in all, it's still early days. Results are just still pouring in and people are still digesting. So expect to see some bullish runs over the next few days.
All right, we'll go through some of those results, especially the big banks later on. And before we move on, what would you say is the perception on the markets right now? Obviously, you're saying it's perception that's driving the markets. What's the overall investor perception?
Well, investor perception, you can gauge it from the performance of the all-share index. All-share index is still up 30% year to date, and we're right in the fourth quarter of the year. So looking like we might close the year on a positive note. On the month-to-date level, we're slightly down, 0.2%, of course. That's for the month of November. It's still early days. I think investors are cautiously optimistic, and let's also remember that we're also in a wave of capital raise, so investors are also quite stretched in terms of where to pour their investments in. So there are a lot of banks that are raising billions, hundreds of billions of naira, and so that's a lot of investment. And of course, people also still have one eye on the exchange rate and asking themselves, as we continue to invest in equities, how do we balance that as well? How do you balance your portfolio with exchange rate devaluation so that, at the end of the day, as much as you're doing well from a naira returns perspective, you're also doing well from a dollar returns perspective as well. So all in all, like I said, you're gonna expect to see a lot of positioning towards the end of the year before next year, because you would expect a lot of companies to do well by the end of the year, despite how difficult the economy is. I think some companies are likely going to do pretty well. There's those companies that have done well this period, even though the economy is, pretty much in a bad shape, but it's favored them. So those companies are right for investing at the moment, and then you likely see people benefit from that next year. While everything stocks are, perhaps down now. Remember, companies like Seplat hit an all-year year high. Exactly.
Yes.
So Seplat, when we started here, was about 3,000 something naira, and we're like, Seplat just hit a year high, and then 4,000, the 5. Now it's
heading towards 6.
Heading towards 6,000, and so. And of course, you're also seeing bullish runs from the likes of the Transcorp as well. It's been bullish all year round, and looks like that stock is likely going to close the year even stronger than expected. So, there are some downsides, but there are a lot of positives, and the results that we're seeing, speak to that too.
Yeah, and there've also been a number of listings this month alone. Did that really have an effect on the market? And of course, there's also excitement in the build-up to listings in Q1 2025. How do you think that's going to impact the markets?
Yeah, listings also don't necessarily impact the market because they're not there are not a lot of them. And it's usually maybe in a year, we tend to see like maybe 2 or 3 new fresh listings. One of the most recent one is Aradel. Yeah. And so what you see is that the impact you get is an increase in market capitalization, right? So the market capitalization of the index, all share index sort of increases, and Aradel came in at about 3 trillion or thereabout. Yeah. So we've seen that that's how it impacts the market. And of course, it can create a bit of excitement if there's enough liquidity, because then investors think, okay, well, this is a good stock. It's in oil and gas. Prospects look good, and then maybe this is going to probably pave the way for more listings. I do expect a lot of listings next year, by the way. Yeah, I do expect some listings next year. But yeah, listings is good, because then, it excites investors, and we're always looking for fresh investors, new ones, younger ones to come on stream as well. So, but it would be nice to see a lot more tech companies list on the exchange.
Tech companies. Are we there yet? Of course, we'll see. And let's come to the top gainers for last week. Transnational Corporation PLC, they were back after their share reconstruction, surged by an impressive 314%, followed by Unicell Interlink PLC, which rose 60.57%. Other notable gainers include University Press PLC, Livestock, Nigeria Flour Mill, Skyward Aviation, Vitafoam, and so on and so forth. But if you notice, I think I at least noticed a lot of, they're not the typical bellwether, heavyweight stocks. Why do you think this is, or what's going on here with the top gainers? Yeah,
there are few heavyweight. There's Transcorp in here. There's Vitafoam. There's maybe corn oil, but I get your point. So mostly penny stocks, and that's what we call them. Markets are often dominated by penny stocks, NGX. If you go back into the last few weeks, and that's because penny stocks tend to move pretty faster. From a capital appreciation point of view. But all in all, I think it's still a lot of gainers here. I'm seeing 60%, 20%, gains, and that's quite, robust. And Transcorp, of course, was because of the capital reconstruction that they share reconstruction that they had. That also, boost the share price as well. So then, from the decliners' point of view, we also saw a lot of penny stocks did decline, even though we had heavyweights here. When I mean heavyweights, I mean the suits. That's the stocks worth over 1 trillion. So there's Boa Cement in here that also did drop 11%. And of course, even though Cadbury is not a sweet, but Cadbury did 9.89% drop. And of course, Aradel, which I think we'll probably speak to later, also dropped 25% during the weekend. That is also a suit because it's worth over 1 trillion naira. So, that's essentially what it's like in terms of gainers and losers, mostly penny stocks. But don't lose sleep. A lot of those heavyweights are not moving yet because they are heavyweights.
It takes a lot of power to live. Let's also, industrial sector is taking the hits on the NGX. I think it was Boa Cement this week down. It was 9.31%. Any hope, macroeconomic, any hope for that sector in time to come?
They are not even in the hope space, because the industrial sector is still up 27% a year. They did take a beating last quarter, down 9% or so. And this week as well, they've been down, or the last week they've been down. So let's also remember that the industrial sector is also, most of the stocks in the industrial goods index have always run at a price to earnings ratio of 12, 13, 14, mostly in double digits. So that means they are actually highly valued, right? They are more expensive than your traditional stock. So the higher your price to earnings ratio, the more expensive a stock is. I'll explain that on the show. So when the price to earnings ratio is closer to 1, that means the stock is really cheap. But when it's far away from 1, 2, 3, 4, 5, 6 is even still considered cheap. But when it's 10, 11, 12, 13, 14, we've even seen stocks that have price to earnings ratio of 40, 30. So those are expensive stocks, and they're expensive for a reason. It's either because they're expensive because investors think that they will grow really fast, and so it's better to buy them now. So buy them because of their future growth. And so most industrial good stocks have a higher price than industry. So not surprised that you're seeing their price drop, but still up 27% year today.
And still sticking with other indexes, top gainer oil and gas sector. Any surprises there?
No, because of some of the movement that we've seen from the likes of Owando, of course Aradel, Seplat, Kono. So the oil and gas sector has done pretty well this year, and they will always do well, especially when the exchange rate is. That's why I said you have to look at stocks that have benefited from the exchange rate depreciation, and so most oil and gas stocks have done well. And the oil prices have been pretty much stable this year, even though we've seen a bit of volatility, but pretty much stable. And of course, these guys earn dollars, and so, and then there's been a lot of investment happening in that space. Whether it's Owando, whether it's Seplat, or even Aradel, there's been gist around them trying to buy one or two oil and gas assets, and people believe once they acquire those assets, or once the acquisition is completed, it's going to add a lot to their enterprise value, and so people are trying to reflect that, and so that's why you're seeing the share price go up. So no surprises here that the oil and gas index is actually up, if I'm not mistaken, over 120% year to date.
Ooh.
Yeah.
Wow. It's been interesting to see the direction it continues to, go, and where oil prices go as well, and the Naira. There's so much that goes into play with that. We're going on a break right now, and of course it is still Follow the Money with Ugodre, and we do have Ugodre here today and going forward. We'll be back and we'll sink our teeth into some of the earning releases. All right. We are tuned in to Follow the Money with Ugodre, and of course he's giving us insight on what's happening on the markets. Exciting times.
Yes.
Mm-hmm. Yes.
Results, Blaze. And I like results. So results are out now.
All right. Let's get into it. And of course, let's begin with some of the big banks. Of course, the Tier 1 bank's valuation rose to about 5.7 trillion after earnings. We had a couple of releases last week and even before this month. Last month, I beg your pardon. Zenith Bank, they announced a pre-tax profit of 1 trillion naira for the 9-month period ending September 30th, including 275.8 billion naira in pre-tax profit recorded for the third quarter. And of course, this is almost 100% year-over-year increase, up from 505 billion. The company's net interest income also displayed exceptional growth, surging over 200% from 415.2 billion to 1.2 trillion. So, what are the major drivers behind Zenith Bank's performance Q3?
Yeah, another powerful result from a Tier 1 bank, and looks like the Tier 1 banks are on a tier, no pun intended, whether it's UBA or Zenith or GT, they've all been on a tier. So for Zenith, it was mostly driven by higher interest income. They did 790 billion or thereabout in Q3 alone. And of course, one other key reason why Q3 was even much better than Q2 for Zenith was impairments. So impairments are basically provisioning, so loans that a bank thinks might go bad. So they sort of like take the loss now, even though it actually hasn't gone bad, but regulatory requirements allow them to sort of take provision. Yeah. So they've taken those provisions. They took a huge chunk of provisions last quarter, about 359 billion in second quarter. So that sort of like affected their profit. And that was why they actually did not do 1 trillion by the second half, at the end of the first half of this year. But this time around, impairment was just 62 billion. And so that wasn't as bad as the second quarter. So that's why they did 275 billion in profit. And so, and of course, another interesting thing is that Zenith also now has 30 trillion in total assets. So, of course, second to Axis Bank in terms of size of a bank in Nigeria. Axis Bank has over 40 trillion or thereabout in total assets. So Zenith now has over 30 trillion, and then of course over 20 trillion in total deposits.
Interesting. And of course, there's a lot of talk that perhaps this stock is also underpriced compared to its peers. What are your thoughts on that?
Not necessarily. I think they're all within the same range.
Yeah, okay.
In terms of valuation.
Okay, let's come to FBNH, the oldest financial institution. They also released their third quarter 2024 results. Pre-tax profit, 198.871 billion. That's well over 200% year-on-year growth. And also Q3 combined with the first half of the year result, that brought the bank's 9-month 2024 pre-tax profit to 610.86 billion, 122% 128% year-on-year growth. And we know that it's been a challenging economic environment. How have they been able to pull this off?
Yeah, for FBNH, of course, owners of First Bank, a key driver was also interest as well. Interest revenue was 280 billion. Net interest, that is 280 billion this quarter, and that is after netting off loan impairments, the same loan impairments that I mentioned for Zenith earlier. So they also did 280 billion. This quarter, and OPEX was slightly higher, which means they did spend a bit more. But nevertheless, they were able to, do much better than they did in the second quarter of this year. Now, the reason why I'm looking at quarter on quarter this year is that all banks have done pretty well compared to last year. So I don't even want to look at last year. So when you compare this year to last year, they've sort of, been blown off the park. So you want to look at, so I'm just looking at them this year alone. So Q1, Q2, Q3.
Growth, yeah.
So Q1 was, I think, one of first FBNH's best quarters. Then Q2, they sort of dipped a bit. For Q3, we've seen them bounce back. And so that's why you're seeing their numbers this good in the second quarter, in the third quarter of the year. By the way, FBNH also crossed 20 trillion in total assets, and of course, in total deposits, they have over 20 trillion total deposit now. They're I think the third largest bank after Zenith.
After Zenith. Interesting. And of course, they're heading to the markets. Are they in the markets already? They're heading to the market.
Yeah, they are heading to the market for a right issue. I think they're probably, it starts November 4th. That's today.
Yeah, interesting. So and there were a couple of adjustments to, the details in their rights issue.
So they did have a bit of a, court battle. And I think they seem to have crossed that line now, and that's why they're now having a 149 billion right issue. Interestingly, at 25 naira per share, which significantly higher than if you compare to Access. When Access came in at about 19 naira or thereabout per share. So, kind of looks like the folks at First Bank are getting a better price for their right issue.
Okay.
But again, it's a right issue, so it's only for existing shareholders.
Yes. All right, we'll see how that pans out. And look forward to seeing the results of this whole exercise. GTCO as well, they released their third quarter results. Pre-tax profit rose to 215.69 billion compared to 105.8 billion. And of course, their third quarter profit helped boost the financial holdings company's 9-month pre-tax profit to 1.2 trillion, which is the highest on record in the financial service sector. I'm sure you're impressed by this, right?
Yeah, the surprise factor when they hit the trillion in the first half of the year. So basically the first bank to do so. But we all know this was basically driven by FX adjustment. So if you remove FX, then the story becomes a little different. Nevertheless, they still were number one because we did do an analysis where we decided to back out FX gains from a lot of these banks in the first half of the year. And the numbers were quite different, right, for some of the banks. But because for that adjustment, you now look at their core banking income, right, where you just adjust one of things like FX. But nevertheless, don't take it away from this performance. Blistering performance, 1.2 trillion. Looks like we might be looking at the first bank to hit 1.5 trillion the way they are going for the end of the year. That's profit, so profits alone. So solid numbers. Pre-tax profit 215 billion. Lower than Zenith, by the way. So that means Zenith, that's just to give you an idea of how well Zenith did in the first 15 years.
All right, we'll continue in that regard. Not a tier 1 bank, and it has a national license. Wema Bank, one of the oldest banks as well in Nigeria, released its third quarter results showing pre-tax profit rising to 30.050 billion compared to about just over 10 billion recorded in the corresponding quarter of 2023. And of course, this has boosted the bank's 9-month pre-tax profit. Your thoughts on Wema, also considering they haven't hit the market yet, and we haven't got too much details as well.
Yeah, it's a tier 2 bank, but it's one bank that I really kind of like their trajectory. I like how they seem to be evolving. over the last 2 years, not just now. They've actually been involved in some capital raise for some time before this announcement was made. And so pretty much interesting to see, because Wema Bank used to be seen as just, some regional bank. But these days, they're one of the first to, have a foray into the tech space with their, I think they have this fintech app, a lot or something. So they've seen a lot of stuff happening there. And no surprises here with their numbers, mostly driven by interest income. So when the bank's numbers is driven by interest income, then that means they've done a lot of loans and advances, and they've also made substantial money from FX revaluation gains as well. So that also contributed to their number. And then of course, year to date, share price have gained about 40-something% this year. So it kind of looks like a dark horse there. So, good numbers from my bank. Again, all the banks are doing pretty well. And by the way, our sponsor, UBA too, is they did drop their numbers earlier on, and their numbers were also blistering.
Yeah, we touched on that last week. But we can't end the show without, moving away from the banks and talking about Aradel. They released their results this week. Impressive, some would say, right? But we didn't see, instead we saw a decline. Obviously, you've talked about how, they're not really affected by fundamentals, but more of perception. They have lost about over 1 trillion. It's about half the price right now on the exchange. Your thoughts on Aradel?
Yeah, so quickly, Aradel, what you're seeing is just profit taking. So a lot of people probably bought Aradel when the share price was much lower, and when it wasn't even on the exchange, when it was still in private hands and listed on the NASD. So now that it's on the exchange, you're seeing people essentially cashing out, and that's what you expect. So when a stock gets listed, for the first time, it means people who have invested in there over the years, it's time for them to sort of cash out and make some of the money. And that's what you're seeing with Aradel. So right now, nobody's looking at the fundamentals. People just want to sell and make some money out there. And then you probably see re-entry. So it kind of looks like that's one stock that would get into my radar pretty soon, as we tend to look at the valuation.
And it's an opportunity, right, to get into the stock. And that's as much as we can take today on Follow the Money. I'm surprised the show just went by so fast, but it's great to have you back, and of course the insights. Follow the Money with Ugodre, brought to you by UBA. We'll do this again, same time next week.
All right. Of course, guys, don't forget to listen to my morning